How can we get by without doing at least a portfolio update on what exactly has transpired for most of our portfolios for this year? So I understand that the market hasn't been really kind to many investors, but personally for me, I've already taken away the lesson in 2020 and 2021 that markets can always go lower, and this idea of rationality is already thrown out into the garbage can. So I think personally for me, because I have a huge concentration in many of these Chinese tech names, so for those of you who are living under a rock, Chinese tech has been experiencing their own bear market in the last 18 to 24 months. So this current market drawdown, I don't think I'm extremely phased or it isn't really anything new. But that's, of course, my own personal experiences. So for those of you who have experienced a tumultuous times in this specific year, do feel free to leave in the comment section down below how your portfolio is faring in 2022. And of course, remember to help smash that like button if you love seeing lost pawns and you love financial influencers being transparent. And I also think that as being a voice or having this platform of sharing my opinions and thousands of you clicking into every single video out there listening to what I have to say, because I think a track record is pretty important, specifically in finance and investing per se. So just some context, the SPY, which is the S&P 500, is down around 19.95% this year. So they managed to eke up a little bit without breaching that 20% mark, but we are still in this long-term downtrend if you were to draw some simple TA lines and whatnot. And the QQQ, which is the Nasdaq equivalent, is down 33% year to date. So that's actually a 1/3 shave off. Personally, I think my portfolio is still considered pretty small, but for those of you who have $1 million portfolios, 1/3 shave off, if let's say you invested only in the Nasdaq, that's a 300 over 1,000 loss. So that's a pretty huge loss. So just some background context as well. I actually uploaded this video on my channel back in December the 1st of 2021. So it's been more than a year now. And you can see that if I were to zoom in, you can see that it has gotten quite a lot of views. Particularly happy about the views, but not really happy about the comments. But that's a discussion for another day. I think that's part and parcel of putting yourself online on the internet. But after gaining 26,000 views, people probably shared it on different forums, laughing at me, saying that, some even started stalking my LinkedIn and say that, this guy doesn't know what he's doing. He has a business degree, he has a finance degree, yada yada. You can see that I'm essentially sitting on at least a 20 to 25% loss at the point of this recording. So this was back in December 1st. And actually, this is not really the full picture, because if you're to look back at how Alibaba was trading at, Alibaba actually started the year at around $120, and based on the recording of this, the input price is actually $133. So I'm quite sure I was down around 25 to 30% on my Alibaba position moving into 2022. And now, long story short, this is just going to be the snapshot of my portfolio thus far and how it has performed in the previous trailing 12 months. So I decided to split it up into two for a better representation. So for those of you who haven't actually been following me, I think I just wanted to draw some contrasts based on my previous portfolio update. So I've actually updated it on the 3rd of December. So this is actually from the start of the month. And you can see that prices were actually a little bit more alleviated, and the total P&L of my portfolio then was around 12%. But moving into the end of this year, actually you can see that it deteriorated slightly, but it's still generally fine in my humble opinion. I'm sitting on a paper loss of around 13.47% on my personal portfolio, and I also kickstarted a side challenge called the $15,000 challenge, and this portfolio essentially stayed flat. So then begs the question, so how do you estimate how well I've done or how well I have not done? I mean, personally, a lot of people, or at least a lot of finance profession, like to compare it to a broad-based index like the S&P 500. So we know that the SPY was down around 19 to 20% this year. So it's sitting on a P&L loss of around 13%, good or bad thing. I'll leave it up to you to decide. But I would just like to caution against taking the numbers at face value, because these figures are essentially not time-weighted. So if you want to compare a specific portfolio manager's returns or how they have performed in the markets thus far, you probably might want to take a time-weighted return rather than this current sitting P&L that I have on the Excel. Because this current sitting P&L that I have here is actually just a simple division. So I'll just take the cost of all my positions divided by the value of the current positions, and then this is essentially the paper loss that I'm sitting on. So before I actually provide you with some actual figures on the brokerage statements itself, I just wanted to give you some color and some context of how I organize my portfolio. So personally, I actually use many brokerage accounts, and I've also promoted for some of these brokerage platforms as well. So before I actually promote the platforms, I have to use them, and I need to make sure that I do my research, I have money, I have skin in the game before I start promoting them. So for this personal portfolio, it's essentially an aggregation of most of my positions in a multitude of different accounts. I have stocks in Tiger, I have stocks in Momo, I have stocks in Scythe, I have stocks in Interactive Brokers. So, and also last but not least, I have a legacy account, which is on FSM1. It's essentially a dinosaur platform that charges me huge amount of commission, but that's a topic for another day. So this is essentially an aggregation of 5 platforms. And for my $15,000 challenge, it's on the Weibo platform. So in total, I use 6 brokerage platforms. So I know it gets a little bit messy, and each brokerage account will generate a different report for me. So which is why I actually consolidated everything on an Excel, and it's easier for me to track. But I do like to say that for my own personal portfolio, because I started using Tiger earlier, that's why I have most of my positions in Tiger. I can actually show you a quick view on my Tiger asset value. So this is recorded based on, I think, 28th of December or 29th of December. So you can see that the recording is around 70,000 in asset value. So that's around a majority of my positions. But that said, please just ignore the weighted returns below. Like you can see that, oh, my P&L for last year is 6K, past returns is 9%, annualized returns is 113%. So this is because this is based on a 1 month performance, and then they just extrapolate it out. If you are able to hit an annualized return of 113%, I think you're better than God. And I don't know how many people can do such crazy amount of returns, but that's not the main point. I think the main point here is this updated returns, right? If I were to pull out into a 1 year time frame and 1 year performance, this is the time weighted return of my Tiger portfolio. And you can see that in terms of the 1 year time frame, my past year returns is around 17.64%, and the annualized is 17.7%. So if I were to compare it to the SPY, which is the S&P 500, I kind of outperformed by a little bit, a small margin, 1 to 2 percentage point, because S&P 500 is around 20%. But you can see that my past year P&L for the 1 year or the trailing 12 months, I am only down 1,200. But you would then bounce back and ask me, hey, Chiking, it doesn't make sense, right? On a $70,000 portfolio, if you are only down $1,000, that's probably 2%, 1 point something percent. Why does it say that it's annualized on 17%? So there are a few caveats here. Number one, because the time weighted return doesn't take into account the timing that you put money into the market. So it's a very complicated formula, but there is an Excel function for it. I don't want to belabor the point, but for those of you who don't know, just Google time weighted return versus money weighted return. And for those of you who have been following this journey, you know that right after the party congress, I actually pumped my last bullet into the market, and I bought like Tencent and Alibaba, which also explains why my Tencent position is like up 30% now. So the calculations of a time weighted return don't take into account those things, because they have to smooth your performance to make it an accurate benchmark. So of course you can say that the analyzed returns I didn't really do very well, but if you do believe that timing the market actually plays a pivotal role, then yeah, sure, then you can see that my past year P&L, I didn't really do very badly because of my accurate, quote unquote, I wouldn't say accurate, but I would say slightly more, I have an inclination of being able to time pretty well the last cycle of when tech went down, or Chinese tech specifically went down by a large extent. So you can see that because of my extreme concentration in a few of these names, you can see that it's up with, as in Baba makes up around 60%, Tencent makes up around 17%. There's a huge amount of volatility when I compare it to the S&P 500. The S&P 500 is denoted in blue. The yellow line is my portfolio. You know that I can't smoke you with this. This is not a figure that I just pull out from somewhere, and this is a brokerage platform graph. In March, if you still remember, there was this huge sell down in many of these Chinese tech names, and you can see that I was down near 40% in March, and the S&P 500 was like down 10% max. And then another time, right after the party congress, I had a drawdown around 45%. And then after this recent rally, it started moving back up again. But do understand that this is just on a percentage basis. On an absolute basis, I think I didn't really lose a lot of money. So back to the point, if I were to go back to how much I lost, here I think I was sitting on a loss of around 5 to 6,000, and if I were to extrapolate out, I'm at 11,000 loss, absolute loss of course. So that's that. And my portfolio is essentially quote unquote saved by many of these names that are currently green, which I'm quite surprised as well. When I was buying them, I didn't expect such a huge rebound so quickly. So I'm up around 3,000 on Tencent. I'm up around $600 on some of these Chinese bank names. So I know there has been a few requests on me updating my thesis and really telling you or walk you through my entire investment journey or thought process on why I invested in Chinese banks. Am I not scared of the Chinese government? Am I not scared of the property collapse and all those good stuff out there? I've been sitting on that. I actually have been scripting the video specifically for Chinese banks, but I actually do have certain, I would say, caution when I'm touting for things like Chinese banks. So at least for the Chinese tech companies, they are a lot more independent of the Chinese government, and they have a very good unit economics behind many of these businesses. On the flip side, for Chinese banks, it's really a dividend/recovery play. And I'm worried that if I were to say that, oh, Chinese banks are the best things in the world, they're trading at dirt cheap valuations, I believe in the Chinese government, I'm worried that it poses a very bad impression on many impressionable viewers out there, and they would think that, oh, just because Chiking said that Chinese banks is investable, that's why I buy Chinese banks. Which is why I've been delaying this Chinese bank video, but do feel free to leave in the comment section down below if you would like to watch a video on Chinese banks specifically. But yeah, I do have my own concerns of talking about Chinese banks, but that's that. And as you can see, I've been dollar cost averaging into KWAP and VT as well. Both of them are almost break even. So really, there are only two things that are offsetting each other. It's basically these two greens offsetting my Alibaba and my Meta position. So yeah, but Meta still constitutes a very small percentage, so it's not going to move the needle. It's really these two Chinese tech names. As long as Chinese tech recovers, I'll do pretty fine, to be very, very honest, but that's that. Then on the next portfolio, I think I also launched this 15,000 portfolio some time back. If I were to look at my records, I actually soft launched it on May, and then I top up the remaining amount of money at around July. And I essentially wanted to try to quote unquote beat the market, and which is why I recorded basically what if I were to throw in this 15,000 Singapore dollars into the S&P 500 at the time that I was recording this video. I would have a cost of around $390, and the SPY price based on the closing of this year is around 382. So it's actually a negative 2% return over the course of around 5 to 6 months or so. And the portfolio value should be around 10,500. And if you go back to my own allocation and how I allocated the capital, I'm actually around at 10,600. So I'm tracking the S&P 500 extremely closely, and I mean I'm slightly outperforming the S&P 500 this time around. But you can see that I'm still holding a crazy ton of cash. Cash is 75% of the portfolio. I haven't been deploying, but I did nibble a little bit on Amazon and Google, and it's down abysmal. It's at least 16 to 20% down. But yeah, I think TSM has been a rather good buy, specifically because after not too long after I bought TSMC, Warren Buffett also started a position. I think it was a $4 billion position. So yeah, I'm quite happy about it. Charlie Munger also bought Alibaba. He might have Tencent as well, and now even Buffett is in TSMC. So I would like to change my surname to Munger Chiking. No lah, I'm just joking. But that's besides the point. So I will continue tracking the S&P 500, and this $15,000 challenge will still be intact. And yeah, I would just like to see that of course not increasing my position. So I don't want to keep putting money into the portfolio. I just want to run it kind of like a quote-unquote hedge fund to see whether I really have the ability to outperform the market. And yeah, we look forward to how things are playing out. And one thing before I forget, so as you guys can see, based on this brokerage platform, I'm only down 1,200, even though if you were to compare, I'm actually theoretically supposed to be down even more. I would just like to also say that so I also do some sort of options trading on the side. So I sell puts, I sell calls. Calls not so much this year, but I did sell quite a lot of puts across some of these bigger names out there. I don't dare touch a lot of all these very volatile stocks like Tesla, but I do sell puts on Alibaba, I sell puts on Tencent, I sell puts on big companies like Disney. And yeah, I think moving into 2023, I'm also still gonna do the same strategy. I'm just gonna put a very big disclaimer here. I don't really know what I'm doing. I'm still trying to learn, and you have to experience it to learn. And I don't trust paper trading, because if you don't have money on the line, everything is fake. Like you have no emotional attachment to it. So even if you outperform the market vastly, in a paper trading account, I don't really buy that argument. So yeah, emotions will really come when you have money and skin in the game. And that is why I've been doing some sort of options on the sides, which also kind of offsets my losses, and which is why the brokerage account shows that level of P&L. I would also like to say that for this basic Excel that I've created for both my portfolios, I didn't include any dividends, and I didn't include on any other side incomes that I have, which is options income. So this is purely from a buy and hold strategy, assuming that they don't pay out any form of dividends, and assuming that I don't play options. So that is why this is the real P&L, and the brokerage P&L is kind of corrupted in a sense. So I hope that explains to a certain extent. And for dividends wise, I think some of you might be asking, where are you going to get your dividends from? Surprise, actually, both my ETFs provide healthy amount of dividends. I think KWEB gave me around $100 to $200 in the start of the year. And VT, even though it's very little because I have a very small exposure, but there is still dividends. So yeah, technically my P&L should be lower because it offsets a certain value. But of course, we are all here for long-term investing. Let's not be too concerned about this few $100 or few $1,000 fluctuations, because at the end of the day, we are here to compound our money, and we're not going to compound our money with a few percentage points. We want to compound at a higher rate. So yeah, this is just me documenting my journey thus far. So last but not least, I think I just wanted to update you guys on the mini competition in case that you guys have forgotten about it. So I posted this on around the end of July, and Alibaba's price then was around $101 per ADR. So I said that let's play a game. I'm taking in predictions for BABA end of year, last bell on the 30th of December. And the deadline for submission was in August. So I've actually compiled all your predictions into an Excel on my end. And there was quite a lot of you that participated. I think there's around 166 of you that participated. And extremely happy that you guys participated. I kind of gained a lot of insights from this mini competition. One specific insight is really this idea of anchoring bias. Because back then, Alibaba was actually trading at $101. If you were to tell me that Alibaba is going to close the year at 80 something, you tell people that it's going to close at 80 something, they'll just laugh at you. But clearly, we have come a long way. Alibaba actually closed at 88.09. So going back to the Excel, the result is at 88.09. So the closest prediction was actually by this guy called Shiren Li. He predicted $88.10. So that's a 1 cent difference, and congratulations, Shiren. So I've realized I kind of screwed up as well, because I didn't really take your email address, and I didn't really take. I don't really know how am I going to contact you because that you have won this competition. So I know there's a lot of impersonation problems in YouTube right now. I hope you guys do me a favor. Don't try to impersonate this guy. But luckily now there's this unique YouTube handle. So if Shiren, you are watching this video, please leave your email address in the description below, and I'll click into your profile so that I can see your unique YouTube ID or YouTube handle. And if you don't get back to me, then I will kind of forfeit the prize, I guess. But at the back of my mind, when I started the competition, I do hope that it was a Singaporean that wins this prediction game, because maybe you can go for a lunch or dinner or something. But if you're not Singaporean, but Shiren Li sounds quite Singaporean, but if you're not, or if you're uncomfortable of going out for lunch or dinner, then maybe we can arrange for, I don't know, an Apple gift card or Google Play Store gift card. We can take this offline, but yeah, do leave in the comments below, Shiren, your email address. But I think I just wanted to end off this video with this competition, because I thought it was really very interesting. You look at this histogram when Alibaba was trading at $101 back in July. Everybody's guesses it's really a normal distribution, and most of the guesstimates are between 110 to 150. You can see that this is the peak of the bell curve, and evidently those that guess between 50 to 80, there's only like, I don't know, 6 of y'all, and out of the 6, Shiren was 1 cent away, and this is the power of the masses. So I'd like to kickstart another competition. So this time around, we are gonna make a prediction for Alibaba again for the end of 2023. And this time around, I've learned my lesson. I'll leave a link in the description below to an Airtable form, and you can fill in your email address and your prediction in that particular Airtable form so that I know how to contact the winner. I don't know what prizes it would be for next year. We'll see again, and I'll update you guys again. But just feel free to submit your predictions, because I really love this idea of trying to crowdsource and trying to distribute all the predictions and see how far off we are. And there are many different lessons that we can learn here. So I hope you guys enjoyed the video. So I hope this lost pond is even more interesting than real pond. But with that, I'll see you in the next video. But more importantly, I will finally see you on the moon. Goodbye.